day two of the conference. As we continue with the theme of strategies for succession planning and wealth preservation, we thought it would be important to address one of the structures which are talked about very often, but maybe not understood, which are the use of family offices as a tool and as a solution for wealth preservation and growth of wealth. To start us off, I'll call on Bimpe to just, Bimpe, how do family offices help manage not just wealth, but the vision and the values and cohesion across generations? If you could just elaborate a bit on that.
Okay, thank you, Devvrat, and good morning, everyone. So, what you find is that over the years, I would say centuries, there are many families in other parts of the world that have managed, to keep their, not just their wealth going, but keep family cohesion, to keep the family business sometimes still owned and managed by the family, but even if it's not owned and managed, to ensure that any sort of assets or income generated by that business is, shared equally, through the family. And basically, a family office has been what has helped, because you look at those families and think, what's the magic? How are they able to get from generation 1 to generation 12? And I'm not able to get past generation 2. And this is what's happening in our part of the world, here in Nigeria and the African continent. There are very few families that have gone past generation 3. So you find that as families grow, they realize that it's not just about the money and about the wealth that they're creating. It's about the structure that is, that business, what is wrapping around the structure. How is there some governance? Just as you have corporate governance in a company where there's a board of directors and there's then there are shareholders and decisions are taken in a measured way after consultation and recorded. A family business or even a family of wealth needs to have governance. So apart from the money that's been managed or the wealth created and the assets that have been acquired, there needs to be governance. And the structure of a family office gives the ability to have a round table where the family sits with their advisors, and hence WYZE Advisory plays that role. We sit at the table with the family members to advise them on governance, to advise them on the best structure, to advise them on things like being communicative about wealth. We talked yesterday about, at what point do we engage, our family members. So the idea is that if a family office gives you all of that, does the estate planning with you, and also ensures that you find the right advisors. Because sometimes, unless you have a single family office, and that's for very, very wealthy people, it will cost you over $1 million a year to run a single family office. What you benefit from joining a multi-family office is economies of scale. So you have, at WYZE Advisory, we have a few advisors in-house, but the majority of the work we do for families is by outsourcing. So we find the right lawyer in Dubai, we find the right tax advisor in Nigeria, we talk about life insurance, and we say, oh, we know someone. So basically, again, apart from just managing money, the family office gives the family a platform from which they can access global services and resources, and that's really the beauty of having that. It's what ensures the longevity, what ensures the planning, and what ensures that the family has the best resources available to do all the other things that are what I call non-financial wealth management.
Thank you. You mentioned about governance, and I'll move to the lawyer on the panel. Adeolu, from your perspective, how does a family office help to institutionalize governance and decision-making for the family business for today's generation and for the future?
Thank you. Good morning, everyone. So in terms, I think the first thing that I'll perhaps talk about is the fact, and I think BN mentioned the fact that there are different types of family offices, and a single family office is clearly very expensive. So it's not something that is necessary, and it doesn't have to be a physical location as well. Is another thing that I think most people it's mostly the organization that's the family of the affairs that constitutes what the family office is. And that organization can be implemented through a family charter. And that family charter, or in some cases it can be called a constitution or some sort of protocol, is a blueprint for how the family addresses a multitude of issues. And that includes starting with the family membership. Who are the people that are the members of the family? You know, it seems simple when it starts with a nuclear family, but as you know, you start to collect other people along the way. There's in-laws, there's spouses, there's adopted children, and then just dependents. And then also in terms of the governance structures as well, the charter outlines the governance structures, and of course, perhaps even before that, the core family values and principles and the vision of the family, and that establishes the grundnorm for the family as to how they progress through multiple generations and what essentially is their reason for being, so that from generation to generation they have a clear understanding. Although it's not cast in stone, it can be changed and it can be adapted from time to time. I think also it addresses the succession and leadership issues, and underneath that succession and leadership transition plans, it puts in place a structure for educating next generation and also mentoring existing generations and developing skills, improving skills, allowing them to segue perhaps into other businesses that the family is evolving in, and puts in place a structure for that. All that is documented. And then also in terms of how the wealth is transferred, separating the business ownership also from the wealth and how that wealth is administered. It also could have investment protocols as well. And the policies for investment, and definitely also it addresses the use of external advisors and all that. So all that and the conflict resolution mechanisms as well are embedded in the family charter as well. Philanthropy, all those other things. And I don't know if you want me to go into like the shareholders agreement now or okay. All right, so, the critical thing is to have all those things in place so that any issues that arise, the family can resolve. And I think those conflict resolution mechanisms through things like a family council are critical, and whether there will be an advisory board and all those sorts of things. All those nice things are established in the family charter that ensures that the family has a structure through which all the various things that they do as a family, separate from the business, are enshrined in that document.
I think it's interesting because both Bimpe and you've mentioned the reference to a single family office versus a multi-family office. And just from my experience, one of the things which I've seen is that clients have a misconception on what their actual requirements are. And family office has been used as a key word which is discussed at parties and everyone wants to have one without actually appreciating what the actual use of it is. And just on that, Bimpe, just coming back to you, because a single family office, if it's set up correctly, would need to have a detailed list of employees. You would have a chief investment officer, someone administrating, maybe a compliance officer, and a number of other roles, which leads to your point, which you said about the cost of setting it up. And it's usually more attractive for families who have much larger families with much larger net asset values. Can you share examples of how a multi-family office like the one that you operate has successfully navigated the complex issues which families face, and how do you balance that conflict of interest if it does arise?
Right, thank you. So I'd like everyone to sort of look at the wheel that we have on the screen, and really that sort of explains to you that in your journey as a wealth creator and in preserving it and transferring it, there are lots of moving parts, and that's why it's a wheel. And at some different times of your life, in the family's life, there's some things that are more important than others. So maybe at the wealth creation part, the investment management, the private bank, the asset managers, the planning, financial planning, etc., is important. It stays important, but sometimes it might be the first thing that a family wants to deal with. So when I take a family on board, literally we look at what stage you're at, and the idea is sometimes they haven't thought about everything. So we say, well, you know what? Yes, you've got your asset manager, private bank, but have you got tax advice? Have you looked at inheritance planning? So really, what I would say is that whilst again, a single family office would need to have a lawyer, tax advisor, it would have an asset manager, all of those employed, which is expensive. The ideal is to have access to a platform like ours where all these moving parts, addressed and solutions are found. So I'll give you just a little scenario that maybe then makes you realize why some of you who may not have thought of the fact that you're really at that stage where having a multi-family office intervention it could be important. So the founder of the family is now probably in their 80s. Next gen is in their 50s and looking after the family business, and their children coming up. But there are various issues. I mean, and again, look at that triangle. One person has 4 children. Each of those 4 children, like Adeolu says, has spouses and has nieces and nephews, cousins, and on and on. And sometimes when we're navigating it, what I'm trying to help the family to do is make sure that every aspect, whether it's educating the next generation, whether it's getting a second passport, we literally have to project manage exactly where the family is and ensure that we're addressing, as we're addressing the second passport, we're ensuring we're addressing tax issues. As we're addressing education, which just came before, because, maybe from that family pot of money, there's a trust set up to pay school fees. We're addressing the fact that maybe they have to buy a property, or we're addressing the fact that they need tax advice. And sometimes, believe it or not, we're addressing even healthcare issues, because somebody in the family, of a child and family, has moved to the UK and has health and care needs. And one thing that people don't realize, you have to address reputation issues. So we actually even help families to navigate, the profile that they have online, ensure that we educate even a younger generation about the use of social media, because some of those things can negatively impact the family's profile when they're trying to raise money, and someone has seen them splashing the cash and having 5 Ferraris, and they're like, you're fundraising, surely, So the whole issue is that, it's quite, I would say, you're juggling many balls, but the whole idea is we put this sort of will in front of a client and say, you're going to need all of this, but don't worry, we are there to flag the issues and address the issues and make sure we find the solutions for you.
Thank you. You've mentioned, obviously, the fundraising aspects of that a family office may undertake. You've mentioned health. And that, I think, brings us to you, Amit, in terms of, Anil, in terms of insurance. What role can insurance play within a family office structure, especially where you have illiquid assets which are generally held by families, to help equalize and to address some of the points that Bimpe mentioned around generating fundraising, medical insurance, etc.?
Yeah, thanks for bringing this up. And I'm hearing from my dear colleagues here about how family offices can help HNI clients. But we always overlook what are the challenges family offices have when they're distributing, when they don't have equal distributions to family members or the next generation. So what happens? There may be a tax liability, there may be a political risk. We've seen around the world what's happening. Wealthy families have lost wealth overnight. We've seen what has happened in Ukraine, Russia, right? People have left wealth overnight and moved to another country. Yesterday we heard about holding dual citizenships. But what happens? Are you able to move assets? No. So the best tool we could hold into the family offices or into a portfolio is offshore insurance. You have an offshore insurance, this is the only liquidity you can have as guaranteed, because this will immediately create a cash flow to the family office. I know there are a lot of challenges or a lot of questions asked by family offices or HNI clients that I'm cash rich, I have cash, why do I buy insurance? But if the insurance can give you a multiplier effect, so you put in $100, if I give you an insurance for 500, why not take it? So I'm increasing your wealth also by 5 times. So this is a great tool to have into a portfolio, which is the only guarantee you can have on the insurance side.
Thanks, Anil. Femi, coming to you, yesterday at your panel on tax, you mentioned about the increasing tax transparency and the scrutiny, which is global scrutiny that is happening. What are some of the challenges or hurdles that a family office needs to look at and consider, especially when they're considering best practices that they should adopt keeping in mind some of the aspects like Anil mentioned about insurance money coming in and the potential of that being tax-free. But then if you could just talk about that, please.
Okay, thank you very much, Devvrat. So looking at best practices, there are quite a number of them. But I think what comes to mind immediately, because what we are talking about is preserving wealth and ensuring that the family offices are compliant, right? So balance and intentionality comes to mind. So if you like, the acronym BI, not AI, but BI, balance and intentionality. So if you think about it, a family office should have a robust governance and compliance framework. You have to be intentional about it. There is no use the business is trying to make a lot of money and then the money or the wealth is eroded because of non-compliance with regulations, with corporate governance and so on. So one of the things that come to mind immediately, and I think you alluded to one of them earlier on, is the family office can actually appoint a chief compliance officer, for example. That's being intentional. It may actually come from the family or it may be external. But that person will ensure that all the compliance gates are actually being watched and all the compliance requirements are adhered to. Another thing that can be done, you can actually engage external tax advisors because obviously there may be things internally within the family office that you're unable to do yourself. And engaging external tax advisors, can help. One of the other things that come to mind is being proactive with your tax reporting. So if you think about it, you would have many things that a family office needs to comply with from a taxation perspective. So for example, you have VAT returns to file, you have company income tax returns to file, you have transfer pricing returns to file, and all of that. It's about being proactive with those things, because when you're not proactive, if you let the taxman in any jurisdiction come to you first, then you might actually be in trouble and end up eroding that wealth that you're trying to preserve. Something else that comes to mind, and this is now looking at cross-border jurisdictions. So again, there has to be, you have to be proactive about creating collaborations cross-border. You have to look at things, from a cross-border perspective. So if there is a family office with businesses, you may have a holdco structure. In one jurisdiction, you have opcos in so many other jurisdictions. You need to ensure that you're actually looking at the activities and all the compliance requirements in all of the jurisdictions to ensure there's no double taxation, for example. You're trying to invest in multiple jurisdictions. You're saying, okay, which jurisdictions have, say, a double tax treaty, between this jurisdiction and the other, just to ensure that you do not, run foul. Something else that actually comes to mind is you could actually be more proactive by having internal regular audits. So legal and tax audits. You could do it. Again, it's about being intentional, just to ensure that you're constantly compliant with the governance requirements and compliance requirements. Thank you.
Femi, there's something very interesting that you mentioned, which is two aspects. So one is you mentioned transfer pricing. And obviously that ties into the fact that in most cases, the family office would be either managing a holding company structure with subsidiaries across multiple jurisdictions. And there, in most cases, would be trade between those companies in different jurisdictions. So if you could just elaborate a bit more on what are some of the transfer pricing considerations that would need to be kept in mind. And I think in my experience, that would be important irrespective of whether it's a family office managing those entities or it being managed through a simple holding company structure.
So that's a very interesting question, Devvrat. I think to start with, it's important to break things down. So people hear transfer pricing a lot. It goes over our heads because it can be quite technical. There are some very smart technical people here. But let's even break it down. What exactly is it about? So, you remember yesterday in our panel session on taxation, we reminded everyone that governments want to increase their revenue by earning from your taxation. So taxation is the revenue of any government. So what the OECD did very skillfully was to bring in countries, to come together to ensure that they can increase reporting, tax and financial reporting between countries. And one of the major objectives of that is to actually reduce revenue leakages from taxation, okay? And one of the things they're trying to do is to say many organizations, many family offices have a holdco structure where you have a holding company somewhere and you have subsidiaries or related parties. And they can actually go ahead to do, have transactions between themselves. And in the process, you can move profit from a high tax jurisdiction to a low tax jurisdiction. So in order to prevent that, one of the major things, and that's one of the reasons why transfer pricing came into existence. So a major consideration is the arm's length principle. All transactions between related parties really should be done at arm's length, which is basically two entities trading together or transacting should transact, even though they are related, they should transact as though they were independent parties. That's a major one. Another one is documentation. So again, why I said it's important to break it down and not go too technical is there are actually some documentations that you need to comply with when it comes to transfer pricing. So for example, a group or a company must have a transfer pricing policy in place. So the transfer pricing policy is basically one that captures how we are going to relate, as a group. And going on from that transfer pricing policy, you would have things like a transfer pricing master file, which is a document that basically encapsulates what's going on in the group. And then each entity in each region or location must have a local file as well. And then beyond that, you will have what they call functional analysis, where you actually entail, you actually state all of the functions that each entity goes through. So all of those things are major considerations. If you think about it, intercompany loans even must be at arm's length. So those are some of the considerations on transfer pricing.
Interesting. Just continuing on the theme of documentation, Adeolu, coming to you, obviously there are a number of documents which can be put in place within a family office or a group structure for a family. You've got shareholder agreements, family constitution, you've referred to family charters, governance policies. You add to that mix trust and wills as well. How do you ensure that those documents are future-proof in terms of and preventing disputes and fragmentation within families?
Okay, so there's a lot of documents, and I think the first thing is that it's what is fit for purpose for each family is different, and it really depends on the size of the family, the aspirations of the family, the sort of business or the underlying business that generated the wealth, and all those things. Now, in terms of, so each of those documents, I think, has different provisions, and I think that I'd spoken about the family charter and how disputes within that a dispute mechanism can be embedded into that family charter to also ensure that you're able to determine how disputes are addressed. And in some cases, and that includes setting up, some bodies like having a family council through which you can escalate issues to, and then also in some cases there's an advisory board as well. I think, but they're also, in terms of all the documentation, each document has mechanisms for dispute resolution embedded within it. So I think in the, in the shareholders agreement, for instance, there's all sorts of provision. A shareholders agreement, particularly pertains to the business, and you have provisions there regarding one of the major areas of dispute, for instance, is when there needs to be, somebody wants to sell or exit, and there usually be provisions within that as to, it could be like first right of refusal provisions, tag along provisions, those sorts of things that ensure that there's defined rules for how those things are addressed, and the amount of detail in that agreement is what really is the first line against disputes, having those provisions in place. And I think even if I go to what Anil mentioned about insurance, if, for instance, somebody wants to sell out of their shares, then if there's no cash to be able to buy out, then having an insurance earlier on, maybe for instance, provide that cash to be able to address that issue. I think also in terms of mediation and arbitration are also some of the conflict mechanisms as well that you can have embedded within all those documents to ensure that there's provisions. I think wills are, and yesterday you spoke about, so if you have assets that are in individual names, then wills, are sometimes used, or those assets are then put into, or maybe put into a trust. But sometimes if you have wills, which tend to be when there's a large, where it's a large wealth pool, wills can be vulnerable to challenge. So that's why other mechanisms like trusts, foundations, and then, and then if that's obviously within the structure of a family office, we advise that you put that in place depending again on the structure of the family. And when you have a trust or a foundation, for instance, that you have the patriarch or the person establishing that puts in place a letter of wishes, which again goes to the issue of control that we discussed yesterday, that whilst the patriarch or the matriarch or the person who generated the wealth or the people who generated are alive, that letter of wishes allows them to determine how the business is run, and they continue to run the business during their active lifetime, as in when they're working, because there's a difference between when you're working or when you retire and putting in place those provisions. So those are like some of the measures you can have. And then in terms of the governance provisions, there are all sorts of policies that are also put in place to make sure that you avoid disputes. So policies include things like, obviously there can be like a code of ethics as to what we do as a family and what we don't do, what we invest in, what we don't invest in. And then there's also things with regards to, I mentioned education before, but there's also things like working in the family business, what it means when you work in the family business. And there's actually in Nigeria, there's been an issue with regards to having the next generation who are used to earning dollars or pounds when they first graduated from university coming back, and then you offer them a naira income and they're like what am I supposed to do with that? Like, seriously, convert it, I'm not coming back to Nigeria. So sometimes within the family structure, they're able to provide additional income or housing or some other perks to motivate them to return or to stay within the family structure. But also it puts policies with regards to how you work in the family and how you show up, and also exit mechanisms as well for when you don't deliver, and how you may progress within the family business, but separate as the family looks on. So it's separate from the business itself, but it gives you a guideline that within the family, this is how you must move. So, and then also obviously in terms of some of the other policies include like your financial policies, no conflict, so you don't set up a competing business to the family business. And we've seen places where, brothers fight, I think, was it Puma and Adidas, I think, that, they all went on, both successful companies eventually, but, you could have compete, and eventually they had to do like an agreement where they decided to go separate territories or something like that. So all those things you can put in place in terms of your, the first line is the documents and the granularity of the documents, and then the dispute mechanism resolutions in each of the documents, which has first people who can help to mediate and arbitrate, like the governing council or an advisory board, and then also if you end up sort of going to escalating, also measures for that, and then worst case scenario is going to court, which if everything is like well documented, there's very few opportunities for things to deteriorate to that level.
Thank you, Adeolu. You've mentioned a very interesting aspect, which is when family members want to exit from the business and they need to be paid up. And as we all know, family businesses tend to be very asset heavy, light on cash. So Anil, just coming back to you, based on that context of a family member wanting to exit from the business and the other family members requiring liquidity, are there specific insurance products which can be used by a family business or by a business in general to provide that liquidity for an exiting family member?
There are no specific products, but more or less there are more of solutions which we can give, wrapped into an insurance through foundations or trust. I would like to share two specific products, I could say. One of them is called the Universal Life. Universal Life products are very unique, unlike whole life products available in the market anywhere in the world. So these Universal Life normally are issued through a master trust, which is free of cost. You're not paying anything for the trust formation. It's a free cost which is provided by these insurers, which are AA rated insurers, reinsured by AAA rated insurance companies in the world. So you don't have to pay any cost to the trust. It's a free cost. Plus, it allows you to have no disputes in the family, because whatever the ultimate beneficiary is, you appointed. And you're allowed to change the beneficiaries while living. So whoever the ultimate beneficiary is of the Universal Life products are, he or she only benefits from these. No other person in the world or any trust or any foundations can legitimate this funds. It's only appointed to the person who the initial policy holder wants to appoint. So that's one of the products which is very unique in the market, and it's not a direct investment linked product. These products even have guarantees built in these insurance policies. So as I said, even earlier I said there's a multiplier effect. So you're putting 100, you're getting a 500. As a layman, why not take that advantage? Because you may be cash rich, but take that advantage, put it into the wealth. So you're creating your wealth also. You're multiplying your wealth as well, automatically by putting that $100 and creating a $500 wealth for the family, which can be used as a liquidity of diversifying equally within the family members. The second option would be here is, we call it the PPLI. It's a private placement life insurance. The beauty on this product is I don't need to transfer any cash into this. I can transfer my assets anywhere in the world. Of course, we have to get into touch with the lawyers, tax advisors, etc., etc. But we can transfer any kind of assets into this PPLI, solution-based product, which means that I don't need to bring cash. I just bring my assets, which I'm holding already with the family office. So I bring this into this. What this product will give you is, again, an insurance wrapped up on it. So instead of bringing cash, I may not be cash rich. I may be asset rich, where the panelists say. So if I'm an asset rich, I just bring these assets. I just have to simply change my custodies. That's it I have to do. And put it under this PPLI solution-based products, which is more efficient in the long run, because whatever the family offices are doing, however they're managing it, it does not change the concept of this. It's exactly the same. It's only wrapped by a PPLI provider under a trust formation. So you can do whatever you want. You can have your own advisor on it. You can have your trust advisor on it. You can have XYZ advisors on it. It doesn't change the concept. So as a client, as a family office, I want that flexibility. I want that transparency, right? So this PPLI will give you the best solutions. Thank you.
Thank you. Bimpe, just coming to you for one last final question before we open it up to the audience. Just drawing from Adeolu's point around resolving disputes and different mechanisms for resolution of disputes, as a advisor to high net worth individuals as a multi-family office, you obviously build a close relationship with the family itself. Are there such circumstances where the multi-family office itself helps resolve disputes? And have you come across those situations where you've been involved because the family trusts you to the level where they're like, look, you act as the mediator or, so to say, an independent advisor to try and help the family find a path?
Absolutely. So just to give you a background, I'm a lawyer by training and profession even now. And one of the reasons why I pivoted about 14 years ago from just running a solicitor's practice in London to creating a multi-family office structure was that I found that I was doing an increasing number of contentious probate cases in the UK. And I would say, if you think of any of the very high-value probate cases that have come into the Nigerian courts after the death of a very wealthy individual, and there have been quite a few noteworthy ones in the last, say, 20 years. A lot of times there was one leg going on in the UK because there were assets in the UK the family was fighting over. And my solicitor's practice, we were all often involved with one side or the other, whoever came to us first. And I found that really debilitating for the families. I mean, to be honest, there was no winner. And I realized that it was really because of lack of structure. So nowadays, when I actually engage with new clients, often the clients come to us because there's been, a transfer of wealth, or potentially there's someone passed on in the family, there's a big pocket of wealth, and somebody in the family, probably the oldest or usually the oldest female, will say, wait guys, before we even divide this up, let's create a structure. And even in creating that structure, there's dispute, there's disagreement. If some people don't want the structure, they want to have their total control. Some people don't like the idea of being transparent in the way the distributions will happen. So yes, I end up being that sort of advisor with a legal hat, and I give them all the anecdotes about, listen, I've seen it happen this way. You could end up in court, but this is the other way of doing it. And you do end up being a bit of a mentor. And that's why the word trusted advisor is something that is a professional sort of label. So I operate as a lawyer, trusted advisor for many families, and try to find the best solution as we are creating this structure. Because the family office must be something that everyone buys into, otherwise it won't work. It's not a piece, there are pieces of paper, like Adeolu pointed out, but for those pieces of paper to actually be implemented and be lasting, the mindset, the psychology, the behavior, the emotional intelligence of every member of the family that's at least at the generation where they are old enough to be in control has to be managed, the dynamic of every family member. So that is the work that I've had some training in doing, and that's part of what we do so that we end up really building something that's going to last. And that's the important thing.
Thank you. Yeah, please.
I can add on one more thing on these offshore insurance. As Bimpe said, there may be family disputes, probate, maybe takes 2-3 years to solve that out, right? But these unique features, which is on the universal life product, which I just explained earlier, has a unique feature where you can change the life insured. So today I am the insured, and there's a family dispute, which may take years to resolve. So what do? So simply I can change the insured to the next skin, or the next shareholders. So there is an option on these policies where you can change your insured person. So this is something you should also consider when getting this universal life into the family offices as a solution.
Thank you, Anil. That was very interesting. Are there any questions from the audience? Do we have anything on the Slido Q&A or?
Yes, if you give us a moment, we're going to set the Slido on, but we have questions from the audience. We have one person there. And is there anybody on this side that has a question? We have one person on this end too. So while the Slido is going on, I want to be sure that you can see the Slido there. So you're going to give me a couple of minutes to get it going. And I don't know if I should take advantage of being the one that has the microphone right now and ask my own question, or should I leave it to last? Because I'm wondering, at what point does one decide that you need a family office? And must you have a family office? Must you have a family office?
If I can take that. I mean, I would say a family office is not for everyone because there are cost implications in whether a single or multi-family office. But I think that if you're a family of certain wealth, and the minute you start having assets, first of all, outside the family business. So you've family business, you're working hard, creating wealth, you've bought property in the UK, or property in Dubai, or you have children going to school in America, you then start to need advisors. And the thing that the family office structure does, which Adeolu said doesn't have to be an office, physical space, is at least you need to build around you a team of advisors who you talk to consistently. Because the minute that child goes to the US and becomes a US person, and is a beneficiary or a shareholder in the Nigerian company, because many Nigerian entrepreneurs like their children to be shareholders, you are bringing that company into the US tax regime without realizing it. So, not call it an office, but you do start to see that, and you should have the same advisors. Don't use one person one year and go next year, because the advisor won't have the history. So that is what you're doing. You're kind of creating, even around your kitchen table or on your phone, 4 or 5 people that you call consistently, and you take their advice, you pay for their services, and before you know it, yes, what you have is a family office.
Yeah, I just want to add to what Bimpe said. I think there is a genuine misconception as to what a family office does. A lot of clients that we speak to who come to us saying, oh, we need a family office, and when you drill down into it, and what they actually need is they need a private office with an executive assistant and some support staff to basically manage the family's affairs. They're not looking at a genuine family office because for their legal decisions, they've got a lawyer on retainer. For their investments, they've got a private banker. So what they're not looking for is an actual family office. And I think what Bimpe said is important. It's what are you looking to achieve from that family office? And doesn't have to be a physical space set out somewhere. Just by the virtue of the fact that you have an investment advisor, a lawyer, a tax advisor, an accountant, and maybe an insurance advisor on speed dial, that's your family office, even if it's informally set up.
Thank you very much. I'll take our questions from this end. We have 2 questions here. And ma'am, do you have a question, ma'am? Ma'am in red. Madam, do you have a question as well? So 1, 2, and then we'll come back this way.
Thank you very much. I've thoroughly enjoyed day 1.
Can we take this out for now? We don't want to see the Slidos yet. We just do a Q&A. Right. Thank you.
Okay, great. Thank you very much for the insights you've shared. I have 2 questions. One for Anil. When you talked about the 5x effect, right? So if you have like $100, if you have $100 today, and you have a product in life assurance that can guarantee you 5 times that, I'm still not very clear on how that works entirely. So I would like for you to please just shed more light, because I'm thinking if I have that today, at what point do I reap the benefits of the 5 times effect, and what would those benefits actually look like for us to be able to get to the conclusion that there's indeed been a 5 times effect on that? So in case my understanding is wrong, please correct, and if it is right, I would still like some clarification. Do I take the second question? Or?
Yeah, go on.
Okay, so my second question is actually to you. You had mentioned that when it comes to wealth management, maybe in the case of someone's death or any other disruption really, there are times where, to make it work, all family members have to be on the same page, right? So from your experience, how do you actually navigate getting all members on the same page? Because there are times indeed that some people literally, you can't just move on because of those disputes that have arisen at the start of trying to even figure out how to move forward. So I'd like for you to please just share, of course, anecdotally in this case, but just to give more insight as to how you overcome that in managing wealth for families, essentially. Thank you.
So to our panelists, should we take all the questions and then you answer them? We'll take one after the other. Okay, please go ahead, sir.
Hi, thank you for the question. The answer would be, basically what I meant to say is that 100 you have, you're putting this into a basket of life insurance. So the life insurance will be 500. Of course, obviously, it's depending on the age of the key man or the person we're insuring. So it could be 500. I'll just give you an example of 100 giving 500. It can even be 100, 400, or even, we have seen on our younger age clients, 100 can even become 1,000. But it's all on the individual insured. Gender, of course, smoker, non-smoker habits. Generally, smokers have higher premiums compared to non-smokers. So this is purely an insurance policy wrapped into the trust umbrella. So it has to be insured on an individual. So I'm covering you as an individual. So the benefits will be as a death benefit. Plus, apart from the death benefit, yesterday also I emphasized, we always overlook on the the cash values of the policy. The policy also is an asset rich itself because it has a cash value. The 100 you're putting in, it also grows in value. So it doesn't stick only to 100. And these unique policies, which is the universal life products, have a zero flow. Flow means basically your risk is minimized. Why? Because these are insured by AA rated insurance companies. They are trillions of AUMs under management, so they can take these risks. So as an individual insured person, I would not be directly participating into investments, and I don't have any risk on the market falls.
So Anil, just for clarification, just so that maybe we can understand better. When you say 100 for 500, am I right to say the 100 is the premium and the 500 is sum assured?
Yes, 100 would be the premium, which is single. 500 is the sum insured. Having said that, that 100 also can be divided into multi-pay. So you can have this as 10 years or 5 years. Typically, it's either 10 years, between a single to 10-year payment term. That's a multiple pay. So you can do that even. You can divide your risk. You can divide your cash flow as well, putting into 10 years payment terms, which will equal to that $100 and still give you that $500 sum insured.
Okay, Bimpe, go ahead.
To answer your question, yes, the process of working with a family to set up a structure, and that structure invariably becomes a family office. It could be a trust, it could be a foundation, which we'll talk about later. But basically, there must be buy-in from everyone. The governance and the charter, the constitution must be a document that is fit for purpose, that addresses sometimes weird issues, but addresses every issue as much as possible, creates that balance. So what do I do? Yes, I do have to spend time. Obviously, instructions will come usually from the patriarchal family or from the eldest child. Their father is getting on years and wants to, and definitely even sometimes, someone asked yesterday, how do you get the older generation? I sometimes say, when your father or I'm in Lagos, let's have lunch. Introduce me. I'm a lawyer and an advisor, and I will ask, hopefully with some wisdom, the right questions and gauge the resistance or gauge what the issues might be. The issues might be total resistance. The old man is not ready to give up any control. The issue might be he doesn't trust his children, doesn't think they will handle the family wealth well, and actually maybe get him to understand that we're going to create a structure where they will have an investment advisor around them, they will have a compliance officer, they will have, sometimes helps to, reassure that older person. But usually I have to spend time talking to literally everyone in the family. I ask for a one-on-one meeting, and I say in absolute confidence, tell me. I've had somebody tell me, yes, my father, I know, we know he's getting on, and, with my siblings, we kind of get on, but I don't want to have to discuss what I do with my money or how often I get my money, or, when my dad is no longer there. I don't want to be part of this. So in that case, we had to write in some exit provisions, and we had to insure against that kind of thing, to say, listen, because usually to dissolve this kind of thing, you need a unanimous beneficial vote. But we had to write something in that said, at a certain age, a certain time, certain things happen or don't happen, if anyone, not just him, wants to exit. And in writing it, I didn't tell the other siblings that was why. But you sort of have to say, here's a provision that everybody could use. So that's one. And I'll just quickly tell you a very quick story. So I had a client once. It was a client, he was in his 80s. He'd been poorly for a while. His private bankers introduced because he wanted to change his will and do some estate planning and actually create a structure. He died before he could, and he died before he could change his will. And I'd looked at his will and told him, big problem, sir. You've cut out your oldest son, who you've fallen out with, and your daughter is inheriting pretty much 90%. Because he had those two children. And they had other dependents. He left, a house in Port Harcourt, things in Lagos, in Dolphin. He had left a huge wealth. Of course, the first thing the eldest son did was go to court, which I knew would happen. And of course, part of his wishes, letter of wishes, was that they should create a family office structure to look after all the nieces and nephews he'd been paying school fees for. So we knew that before we could move forward, we had to resolve this dispute. It was in court in Lagos already. So I had to come into Lagos, sit down, and the daughter literally took us 6 months. And she finally said to me, you know what, can we vary the will? Because I'd like to give him something, a good share. And I said, yes, English law allows you to vary a will. So we did a variation. We went to him and said, you're going to get a third of the assets. And actually, we're going to create family office. And that resolved it. But it took one member of the family sometimes to, allow this kind of resolution to happen. But that's my work, if you get what I mean. And then resolved it. He did take his assets and had said, I don't want any part of this thing. I'm done. But it allowed the old man's wishes to be respected, because they could actually then create the family office, and I could get private bankers around the table with her and do and she wanted to make sure she looked after all the family members that her father had wanted to.
Thank you, Bimpe. That gives us an idea of the kind of things that people like you do, and we can reach out. Can you go on, ma'am?
Sorry, just before that, I want to get Adeolu to just mention one point, because in our experience working with different families from different cultural backgrounds, there's also a significant cultural impact on how this process has to be approached, because every culture is different, the mindset is different. So Adeolu, if you could just talk a bit about that as well in this context.
So just to mention, so for instance, in Nigeria, I think in some cultures, for instance, in the southeast, the first son inherits everything. So for instance, some of the resistance comes from when arrangements are made that are different from that, and that's why those structures and the communication and the forum as well for dispute resolution is quite critical, so that that is addressed. And then of course there's also the issue between genders, where sometimes in some families, the women are not considered, or when they marry, it's like, well, you're in your husband's family now, we don't need to provide. And that has historically sort of been a pattern in some families. So when there's a change, that sometimes causes a bit of ruckus within the family that needs to be addressed. And I think that communication early on, when the structures are being put in place, and that buying becomes critical. And I think also, for instance, there's also Sharia law in some cases. So where there's a Muslim family that's wants the asset distribution, for instance, or the arrangements to be governed by Sharia law, that again are specific provisions that that we work with, and which, depending on what the wishes are and also what the prescription are as well with regards to the faith, some people are quite, they say that my faith is very important to me, and whatever it is that you do, it must adhere to the faith. And then we need to bring in Sharia law experts to make sure that we adhere to whatever it is that they want. So I just wanted to mention that there's also various cultural influences in addition to even the family itself, the nuances. And I think, as Bimpe mentioned, for the first child, who tends to be quite prominent, there's also the last child syndrome, there's the middle child syndrome, and everybody feels as if, there's a certain, I'm old now, and sometimes you have the last child who has sometimes become the wealthiest in the family, and then starts to, rise in terms of their voice essentially increases, and the older ones have to realign and realize, okay, we need to treat this person. So all those things come into play in terms of the dynamics of how things are resolved, and the decision making and the communication.
If I may just add to that. So if we're thinking about the importance of having a family office, so Devvrat mentioned earlier on that you don't necessarily have to have one. You may have different advisors working in silos, okay? But from what everybody is saying, it's very obvious that one of the importance of having a family office is you almost have a unifier, you almost have an aggregator, you almost have somebody that has a helicopter view of everything. Usually you would have a progenitor of the wealth, usually. This person, patriarch, matriarch, they usually would have a vision of how they want to transfer wealth, how they would like their wealth to be preserved, and so on. So the family office will come in and ensure that those wishes are actually, those wishes are actually things that are adhered to. And then where there are disputes, like they've mentioned, you then get, inputs and insight into how you can actually come in as a, shall I say, independent mediator sometimes. So I think one of those reasons.
And just thank you, Femi. I mean, the will you saw earlier. So what WYZE Advisory does is we sit with the person, usually the patriarch or I would say the main promoter, because they're still busy building wealth. They're still busy traveling up and down. They're going to take all the calls from the lawyers or tax advisors. You tell them you need to do this, and they're like, yeah, I'll get to it. So literally what we've realized is that we sit down and having helped to map out what is needed and all the different advisors are needed, we then sit there as a project manager. We sort of sit down with them and give them that helicopter view, but ensure that it's not just all talk, that they actually follow up, because we are the ones who then follow up. And that's the essence of this conference, is to show you that, at every point in your life, all those advisors, somebody needs to be sort of sitting down and managing the relationships or bringing them to the table and ensuring that, the right support is obtained for the family.
I'm sorry I'm doing this, but we have 11 questions waiting for you. So you see why I'm trying to rush you up. But we have one there, and I hope they're not asking the same thing. One here, one there, and one here, and we have 9 waiting in the background. Please go ahead, Mayor.
My question is to you. Okay, so assuming you've gone through the process of setting up a family office, a matriarch or a patriarch comes to you, we put all the structures in place, maybe a trust or whatever it is, where the concern is estate planner. And for some reason, the progeny of the matriarch or the patriarch has a different life philosophy and doesn't want to partake of the wealth because it's from a source that they don't agree with. So let me give a hypothetical example. So for example, the patriarch rears animal to produce fur coats. Like I said, this is hypothetical, but it's based on something I've actually seen in practice. And then the progeny decide, we don't want to touch this wealth. All these structures have been put in place. What then happens when the patriarch passes on and these children reject the wealth and say they don't want to partake of anything that was generated from that particular business?
So you should say who the question is directed to.
Segment.
Okay.
So I'll make you laugh. A lot of the, I would say, big names in Europe and America, for example. I mean, the US, I won't name the bank, but the money was made from bootlegging. Okay, bootlegging was the legal sale of whiskey, for example. We know now that a lot of old English families, and even the Church of England has, confessed that a lot of the money they made at the time was, from on the backs of slaves, from slavery. So that's that's absolutely not new. But I would say to you that in designing a family office in the modern day world where there's communication, you would know, and there's some children who even say, I don't want to do anything about money, I don't want to, I don't care, I don't want distribution, I want to just go and live on an island in Bali without shoes. It's okay, because they have made so much money that money becomes meaningless. And actually, 3, 4, 5 generations later, money becomes meaningless. Philanthropy kicks in. So honestly, when we're having that discussion and they say we don't want anything, okay, you know what? Why don't we agree that a good chunk of this money will be, when it hits the next generation, or even now, let's set up a philanthropic entity, a family not-for-profit foundation, where whether it's to ease our conscience or to give back, or to undo the wrong done, the next generation will feel, and actually it's often the case that families of wealth even thrive when philanthropy is part of their agenda. So that's definitely something we encourage, and not just because the money has been illegally or wrongfully or unethically gained, but because it's good to actually have financial. It's a way to get the younger generation to sit around, think of the wealth with a purpose, create a charter, and enhance the family's profile. So that's one. And I'll be honest with you, likes of Warren Buffett have told his children that all his family are going to charities, and it's still not unusual. Mm-hmm. So that's one solution, if that helps.
Thank you. I was hearing the other day, yes, Adeolu, that I think it's the Microsoft guy has said 90% of his money is going to the poor. So,
hi, hello, good morning, everyone. So my question is to the moderator. So what is your take on foundations versus trusts? Because advice from some wealth advisors is that the foundation is kind of unproven and untested. and trusts have been around for many, many years. So could you just give a quick summary on what you would advise if you're trying to preserve wealth for the next generation?
So we do have a separate panel on trust versus foundations coming up. But just as in one line, they're very similar. It just depends on which jurisdiction you're setting that up in. Foundations have also been around in certain jurisdictions for many, many years. So it depends on where the structure is, but I'll let the next panel cover, and hopefully they'll address any issues, any questions that you have.
So we have one final question from the floor before we go to what we had sent earlier.
Hi, thank you. So my question is for Bimpe. I know we've spoken roughly around it, but just specifically, what, in terms of considering a family office, what would you say the minimum requirement is in terms of, assets? Is this something you look at to say before you take on a family office? And then also, at what point do you say, okay, this is a single family office versus a multi-family office? And then, in terms of cost, could you give a rough idea if someone is thinking of setting up a family office? This is what it's going to cost, maybe percentage-wise or flat rate-wise.
To be honest, on a single family office, the costs are pretty significant because you're talking about salaries of the people, the team around you. You pay them. They're working exclusively for you. That lawyer, who is a senior enough lawyer who's earning $250,000 dollars a year, needs to earn that salary because he's your exclusive staff. So a single family office will run into at least $1 million to $2 million to set up. Now, dollars. Now, in terms of what I do, which is helping families create that sort of multi-family office team around them. On the estate planning and on the sort of non-financial work, there isn't a minimum threshold. It's really, this is what you want to achieve, this is the cost of the service, and let's go. On the investment management, because what I do is I also outsource the investment management to a team of really, really experienced asset managers. Some of them were here last year. There's a minimum of about $2 million, and that's really because the funds sit in a private bank. So your asset managers don't hold your money. They shouldn't hold your money. So they're not custodians of your funds. But you need to find a private bank, usually in Europe, that will tell you their minimum is $2 million or $5 million, and that's what you start off with. In terms of the cost, I think a simulator.
Okay, sorry, just just also, do you consider in terms of if the business is still generating wealth or not?
Oh, absolutely.
Minimum that if you have a family business or a family that's no longer having, income.
No, there isn't any. If, like I said, if the work is all around governance and estate planning, all the things we're discussing here, no, there is no minimum asset requirement. Assets under management. It's really a matter of here's the service, and you might need to have all of us involved in the work that needs to be done, and here's what the cost is going to be.
Okay, the good thing though is I'm not going to take a tea break anymore. We're going to run straight to the next panel. However, if you want to stretch your legs while we're having this conversation, let them answer all your questions. You can step out and pick up a cup of tea and come back to your seats. So, because I have other questions coming up. Please go ahead, sir. And I'm sure you all have seen that. So once they're done, just start taking them one after the other as it comes. Go ahead.
No, I just want to make a comment that it doesn't have to be European banks. There are some other African banks that the minimum requirements are less, and they also offer the same services.
I was going to say that as well. That's, I think we get out for less than $2 million.
No, but that's interesting because somebody was saying, so what? I think it was Madam that asked, what if they don't want the money? Someone said, bring it to my bank, bring it to me.
Can I just quickly answer that? And you're quite right, because
the microphone
pretty much every family that I work with is multi-banked. They will have, if they're Nigerian, they will have assets in it. And even the Nigerian banks in the private banking space have a minimum. It may be 50 million naira. It's not, you don't walk into it's not a retail banking arrangement you want. It's a private banking arrangement. So whether it is a Nigerian bank, a Ghanaian bank, there will be a Swiss bank involved, there will be a UK bank involved, because you want specific portfolio construction, asset allocation, you want some bespoke services. You're talking to a private bank, and those private banks in any part of the world have a higher threshold than if you're a retail client. But definitely, what I'm saying is that I don't set that threshold. We're working with you to make sure your funds are sitting with a private bank that is fit for purpose for you, but they will tell you in Nigeria it's 50 million or 100 million, or in London is, to be honest with you, there even FBN UK is here. In the UK, I believe it's £50,000 that will guarantee you at least some sort of premier bespoke banking relationship. But some of the Swiss banks are higher, if that helps.
Anil, do you want to take the first question?
Yes, I can. In fact, the person who asked this has read my mind. I couldn't answer this earlier. Yes, there are products available where if you put in that 100, as I said, the 100 will grow as well, as an example. You can take regular incomes from the product itself as well. Not only regular, you can even take a lump sum and a specific age. And of course, whenever the unfortunate event happens, a lump sum is also paid to the beneficiaries. So these products are very, very flexible. The products are available in the market.
Thank you.
Can I speak to the next question?
Yes,
I'm
please.
worth 13 million with 800K annual family business profits. Should I set up a single family office or join a multi-family office? You'd be surprised that if you were to set up I would say multi-family office, and the reason is the cost base. That 800K will be eaten up by your advisors' salaries. 800K will barely pay for, 6 people that you need on an annual basis. So that already is a problem. You want a multi-family office structure where, first of all, your economies of scale. So what I run ensures that you have an annual retainer that gives you access to the services you need when you need them. Because you won't always need that lawyer in Dubai, you won't always need that property manager in the US. But for that transaction, you do it and you pull out. So yes, definitely, I would say that's a multi-family office money we're talking about. Come on, see me.
Femi, go for it.
Yes, so on the tax question, so typically there is an age threshold for taxation on a personal level. So typically, kids don't have to pay tax. Usually you would see jurisdictions where you become 18 before you become a taxpayer. But what is very important is, because we're talking about transfer of wealth here, we're talking about preservation of wealth, and so on. What is very important is you start to think about the person transferring the wealth. You start to think about the wealth itself. So for example, is this wealth going to end up with me paying inheritance tax because I've not taken out an inheritance tax planning advice using a tax advisor, or taking out insurance on inheritance tax that I may have to pay in the future? So some of these things, because people say, I'm going to transfer my wealth to my son, to my daughter, and this and that, you have to think about when you do it, what vehicle are you transferring your wealth into, and basically, what happens to that wealth before you pass on and after you pass on. So those are some of the considerations that you should actually have in place.
Okay, the next one. Just to tell Femi, that kids there, it's not just kids. I think it's children the person meant. So it doesn't matter. They're not under 18. They might be 40. They might be in their 30s. So.
Adeolu, do you want to take the next one on...
The pets question. I get the pet question. So, so I think we've spoken about wills and how, wills can be vulnerable to challenge, and potentially if you will money under Nigerian law to your pets, most likely that will is going to be subject to challenge. And perhaps a better arrangement may be that you would put in place some sort of philanthropic type arrangement that lends itself towards nurturing your pets and also contributes funds towards that, within whether it's the policy of the family constitution, and then also within the trust structure as well. So, and then also depending again also on the jurisdiction of all the instruments, whether it's the will or the trust, and where that pet is, all those things come to bear. So that will most likely will be subject to challenge unless it aligns with the values of the rest of the family, or adequate protection. And also it depends again, obviously, on the ages of the children, if there are any children, and other beneficiaries that the family provides for as well. And I'll just, in terms of the next question on the irrevocable trust or family constitution, the next panel will be addressing some of those questions with regards to the details of the trust and whether it can be overturned and things like that. So
sorry, before you go, Adeolu, I'm just wondering, as an ordinary observer, if wills can be so contested, why do we still advise that people write wills then, especially if you have a lot of money?
So I think there's, first of all, it depends on if you have assets that are depending on how the assets are held and the location of those assets. So there's some assets where, depending on as I said, it's better to put a will in place because you have to transfer. So because what usually happens to a lot of people is that they've become wealthy over a period. So they'll have been accumulating assets, for instance, in their name, as a personal asset, and when the time comes to potentially transfer, there may be limitations or constraints to that transfer into either a trust or a foundation or a holding company and that sort of thing. So that asset then remains potentially under an individual name. And I think even also, for instance, in the UK, I know that a lot of people have moved some of their homes out of trusts or companies into their names. And in that case, it's going to have to be a will that will address the transfer of that asset. So it really depends on the particular asset, but wills, in terms of the challenge of wills, and we've seen that in Nigeria with regards to all the disputes over many years, even lawyers themselves would write a will and then their children would also come out, who are lawyers, will also come and challenge it. When there's significant wealth at play, they have tended to be vulnerable, and the complexity of that significant wealth usually means that you need more sophisticated documents, products, and instruments that can address all the various elements of it and also put in place some policies around it and also dispute mechanisms.
Just to add, I think the other reason why wills are important is because a number of jurisdictions also have forced heirship rules, which means that if you don't actually have a will in place, the law which sets out how the distribution of assets would be done would apply. And a lot of clients do not want that to be, and Sharia is a good example of that because Sharia has a certain distribution set out under the law, which if clients do not want it to apply, then a will is the way to protect that from happening.
In fact, Devvrat, maybe I'd like to really just highlight the fact that people who have real estate in Dubai, I believe you have to write a will in order for the asset to pass according to your instructions. Your Nigerian will not be acceptable. It will pass otherwise under Sharia law. Maybe you want to talk about that.
Yeah, so if you have real estate in Dubai, you've got two options. One is either you can do a foundation in Dubai itself, which can hold the real estate in it's a tax neutral structure, which then allows that post something happening to you, the assets are continued to be held in the foundation and can be the income from that or can be used by family and the income can be used as well. The other is to have a locally registered will, because if you have a will in Nigeria, which is a global will, which is intended to cover all your assets, there is a possibility that the Dubai courts would reject that will. And there also is a significant delay in the process of those assets in Dubai being transferred because you would first need to get a succession certificate in Nigeria after probate is completed to be able to take that to Dubai to try your luck with the courts and hope that the courts would accept it. And whereas if you have a local will in Dubai, and now if you're non-Muslim, the DIFC has a very good process for a registered will, which actually works very well. And within 3 months, probate is completed and assets are transferred to the beneficiaries. And because it's a registered will, there are only very limited circumstances in which it can actually be contested.
So, see, Anil, if you're buying property in Dubai.
Yeah. I was also going to add that a lot of people in Nigeria who are of significant means still die intestate. And then you have to go through getting letters of administration and, and then the decision with regards to how the assets are distributed, first of all, it's not a cohesive, it becomes a distribution as opposed to, you managing whether a business or wealth portfolio and all those other things that the other structures present. So when somebody dies intestate, then they've clearly, and depending on the nature of the family, whether the family is a cohesive unit that can make decisions together, or if guidance has been provided by that deceased person, then their estate then becomes really vulnerable to disputes. So it's important, to certainly put in place one of those structures as opposed to dying intestate. And, I think age is always a critical thing. People always feel like sometimes I'm too young to write a will. Another thing I'll just round up with to say is that the structures allow you to leave legacy as opposed to leaving an inheritance. And I think we had a very wealthy gentleman who came to our offices, and I think after living to almost 80, he'd realized that the wills he'd put in place for his considerable wealth was not going to serve his interest in terms of, because his children were now older, like 40s, in their 40s, and he could see from the path they were already going on that, okay, this is not necessarily going to serve my legacy. And then he wanted to then move into a structure where he would establish, trusts, a family office, and a structure that would allow him to prescribe what his legacy is for the work that he has done. Thank you.
Bimpe, over to you.
So Bimpe is going to take her last two questions.
That's
yes.
Right. So I'll take you're planning to set up a multi-family office. Is that something you could help with? Absolutely. That's why I'm here. Please see me.
Just want to add on that. I think do remember that multifamily offices are in most jurisdictions regulated entities, which also means that you're subject to the Financial Services Authority regulating them.
No, it depends. It depends
on the activity.
If you're on the activity. So what I've done is the investment activity is carved out. So if you're not doing investment activity in any country, even in Dubai, you're not regulated. So basically, I outsource the investment activity to another family office who sits next to me and does all of that. But even in setting we work with them in setting the asset allocation, the investment goals, and literally they then deliver on the investment and the returns. On PEPs, what are your considerations of working with PEPs? First of all, I always say to people, the word PEP doesn't mean criminal. I think people should please, and I think I live in the UK. I've worked in the UK as a lawyer for over 30 years. And I have come across, and my focus has always been working with Nigerians and African families, even when I ran a law practice. And touch wood, I've never, ever come, into any problems with the authorities, because I'm very mindful of the duty of to ensure that I do my customer due diligence, PEP or no PEP, okay, to the nth degree. And in a way, I say to private bankers in the UK or tax advisors in the UK I meet that, to me, Nigeria is my lowest risk. To them, Nigeria is high risk. Why? Because I grew up here. I'm looking around here, faces of people that I went to school with. We know each other's brothers. They worked in different companies. I was a lawyer here. So already, when you're part of a community, you already know where to find the problems. It's where the skeletons are buried. And definitely, in the UK, the royal family is a PEP. You won't hear any lawyer saying, oh, I don't want to work with them. What you do is you really get to the source of wealth. So when it comes to people who are politically exposed, and of course, it often doesn't mean that it is just the person who is holding political office. It will mean their spouse, their sisters, their brothers, their parents. And I always tell people, before you enter that, world, have a meeting, let everybody know what you're doing, because it's going to impact all of them. Accounts will be closed left, right, and center. But the most important thing, in Nigeria today, we have different types of PEPs. You have the people who, yes, if a client walks in and says, I want to buy a house in London for $20 million, and I'm like, okay, what have you been doing, sir or ma? I'm Minister of X. And before Minister of X, I was a primary school teacher. With those quiz programs.
Read a lot.
That's read. You just think, thank you very much. But no, thank you. Because you couldn't have amassed $20 million, even $1 million from even if you said I was a bank executive, I was a bank MD, and I became minister, and you're buying a house of 20 million. No, because I know the country and I know the kind of salary, and I'll say, bring your pay slips, tell me where you earn that money, no, all of that. And the other thing is, we do have people who have made money already and then gone into political office. In fact, I have had clients, I've had clients who are clients of mine now for over 30 years, because I've had them as when I had my law firm and still see them as clients. And some of them have gone into political office. So I've known them, I've known their source of wealth, I've dealt with them, worked with them to create a family trust. And then they say, and I say to them, well, okay, from this point on, no more assets must come into the pool. From this point on, we divide your life before and your life after, and different rules apply. But I'm very rigorous, and sometimes it just turns clients away, it puts them off. But I will ask, and I say, are you ready for the inquisition? And if you are, we're good to go. So it's not a matter of being a pep, it's just a matter of me making sure that I actually comply with all the anti-money laundering and customer due diligence rules that I must apply before I onboard a client. And I do decline clients if I'm not comfortable.
Thank you, Bimpe. I think you guys should address this question and let that be the final question,
Sure. So I think the answer to this is it's a conversation, right? Because in most cases, the family constitution is not actually a legally binding document. It's a moral document which the family has set up in place. Now, if it was something more than a family constitution, if it was a shareholders agreement which is actually binding between the shareholders, then there is obviously scope to enforce that. But the key important aspect is to have that conversation, and to have that conversation on the basis of that, look, if I was not in the business, this is what the impact of the business would be. So can we have that discussion around my financial compensation as the person running and growing the business? I think we should stop at that point. Femi,
I just wanted to mention that there was a session yesterday on emotional intelligence. For that question, please get the video of yesterday's session. It will really help you.
Thank you. Thank you very much to everyone on the panel, and thank you to the audience for the plenty of questions which gave us a chance to discuss more insightful topics. Thank you.